Okay, let's have a few final questions for Aki Akeredolale, who is the CEO of the Lagos Commodity Exchange being planned. And of course, as you may have heard, in the earlier part of the conversation, what's been done. Aki, let's have just about one or two more questions for you very quickly. So what would you and your members be trading when the exchange, the commodities exchange, actually takes off?
I didn't get that. What? I didn't hear the person.
Yes. What would you be trading? What will be traded on the Lagos Commodities Exchange being planned?
Okay. Okay. See, the Lagos Commodities and Futures Exchange, what we've done is that it has 4 asset classes. What we're doing is that we are facing them, over a period of 36 months. The first part that we're focusing on is actually the commodities exchange, the commodities market. That's agricultural commodities. The second asset class that we're going to be looking at later is the crude oil and futures. And the third part will be currency, and the last part of it is going to be solid minerals. You see, the good thing about what we're trying to do is that by the time we are enabling the people in the agric space, it's going to be very, very convenient for them to do spot trading on currency when we get to that point. And also, when we were doing our strategic document in looking at the Nigerian economy, we realized that the crude trades for Nigeria's economy is still done outside Nigeria. And what we're trying to do is to see how we can bring that crude trading part of it on this platform and in Nigeria. So a particular level of float in that particular space will actually be floating in our system, and Nigerians will be able to benefit and take advantage of it. And the dealing member firms are poised to participate in this part. We have engaged the chartered institute of stockbrokers, because one of the key things that we notice is that the areas that we're going into is a green field, even in Africa. So there's a high level of capacity building going on to be able to build capacity for people that will be able to play in this particular space and have this particular optics in mind on the outcome of what we want to do. And part of the KPIs that we're looking at in the next 36 months is to be able to see that as people are trading and settling their trades in commodities, agri-commodities, if there are imports, there are exports, and there's proceeds from those exports, they can actually trade them and sell those proceeds directly on the exchange. And that creates liquidity for easy entry and easy exit of the participants that are going to be trading on that platform. Our members are going to be basically at the peak part of the pyramid, trading the electronic receipts. And but there will be other parties, because the value chain is long, like I said. There are so many people that are going to be playing so many roles within the value chain. For example, in the warehousing part of it, you are going to have people that are going to be focused on evacuation alone. There are going to be some people that will be focusing on shipment alone. There's going to be some people that are going to be focusing on fumigation alone. There's some people that are going to focus on grading alone. Some people are going to focus on marketing. So along that value chain, from the produce part of it, because, for example, the produce, the quality of the produce is very important, all the way to the processors, all the way to the people that are going to do preservation. But our dealing member firms are going to be at the peak of the pyramid, whereby when the electronic receipts are issued, our members will be able to trade on it, and it will create them liquidity for our market and create activity for our members also. And in particular, it will put our country in the biggest space, because Nigeria has the capacity to be the hub for commodities trading in Africa, for crude trading in Africa. And if you look at the Asia conference that we just left, you will see that we are at the forefront. If you go and look at our GDP, we are at the forefront. So we have the capacity to be the hub of commodities trading in Africa, and that is the space that we want to play in, and we are working towards playing in.
Aki Akeredolale, thank you very much. We appreciate the sweet crude part of it. Is a switch, and I think that will be music to every Nigerian's ear to see that perhaps in the not too distant future, we would have an exchange here, domicile in Nigeria, that will be able to trade at all our crude oil, I think about 7 of them, Escravos, Kwa Ibo, and the rest of them that we produce here, and we can do those transactions here. Nigeria can actually benefit from what is produced from their own soil and been investing in the oil market. That sounds like a game changer. Thank you very much. Akin Akeredolu, the CEO of the Lagos Commodities Exchange. Well, we're sticking with the markets. This time we're crossing to the debt market and a bit of that. You heard earlier with the central bank yesterday selling, get a figure, 371.46 billion naira in 3 dated instruments. 182, 98 day to maturity, 182 day to maturity, and 364 day. The highest was the 364 day to maturity, coming in at 14.75%. It's been a very eventful week at the debt market. Of course, yesterday at the FMDQ, total treasuries sale was about 110 billion naira, and the 4 most actively traded treasuries were those of 21st of February 2019 and 13th of December 2018, coming in at a discount high of about 13.3% and 12.20%. The Naira papers were also active, basically around the long-dated instruments maturing 13th of March 2036 and 18th of April 2037. So investors keep piling some of these trading actions on the long-dated instruments. Let's cross over to the FMDQ exchange place in downtown Lagos, where Jumoke Olaniyan, who is the Vice President in charge of market infrastructure of the FMDQ OTC Securities Exchange, is joining us for this conversation. Jumoke, good morning, and it's nice to have you for this weekend get-together.
Listen, how are you doing?
Yeah, it's good to have you here. It's been a very busy week in terms of aggressive central bank treasury auctions, as well as secondary trading activities on your platform.
Yes, indeed. The week came in tight, but there's been quite a bit of liquidity injected into the system. It's been net maturities against the maturity of the Treasury bill versus the OMO auctions that the central bank had run this week. So the market had been reacting to the excess liquidity as you would in the market. In fact, yesterday the market closed with excess liquidity of about 200 billion. And as you would imagine, that had fueled the market looking for where to invest those extra funds. And so we saw quite a lot of activity in the fixed income market space, especially in the Treasury bills market space. Also, the market had been anticipating that from the OMO auctions, that there was going to be quite a bit of a rate hike. And so what had happened is there had been quite a bit of sell-offs the day before. However, when the results came out, the results were not as high as the market had expected. Market had estimated a hike of about 50 basis points, but the result came out with about just 20 basis points. And so what happened is the market came back, dealers came back into the market seeking to pick up securities, which they would have gotten at the OMO auction, but because of the rates weren't as high, so they weren't as successful as they thought. That saw rates, across the fixed income space, specifically the short to the medium term, go up by almost 20 basis points across board. The bond market had traded quite flat. As you'd imagine, there's a lot more interest in the short end of the curve as against the long end of the curve. So for the bond yields, we didn't see quite as much movement in that space as we experienced in the Treasury bills market.